Hello, everyone, and welcome to AI Explorer Journeys, our podcast where we navigate the world of artificial intelligence. I'm your host, Sarah, and joining me today is my co host, Kevin. Hi, Kevin.
Hi, Sarah. Hi, everyone.
So, I saw a headline this week that I had to read about 3 times to make sure I wasn't hallucinating. OpenAI has supposedly signed compute contracts worth nearly $1 trillion. I mean, trillion, with a T.
It's completely insane. OpenAI, the company behind ChatGPT, went on the world's biggest AI hardware shopping spree. But here's the real mystery, right? Where on earth is the money coming from? OpenAI is still a young company, burning cash like there's no tomorrow. How could they possibly commit to spending $1 trillion? It feels like the ultimate Silicon Valley story of fake it till you make it.
That's a great way to put it. It feels like they are faking it big time, signing these massive deals without having the money in the bank, just hoping it all works out in the end. A lot of people are calling them the eye of the storm in this AI hype bubble.
Right. They've basically put themselves at the very center of it. But there has to be more to it than just a promise and a handshake. You can't just walk into NVIDIA's headquarters and say, put $1 trillion worth of GPUs on my tab.
Exactly. They didn't literally have $1 trillion in cash lying around. What they did was invent an ingenious financing playbook. It's a bit of what some are calling financial alchemy. In simple terms, OpenAI leveraged its position as the top AI firm to bind its suppliers and investors into funding its own growth. They turned future potential into present-day purchasing power.
Okay, financial alchemy has my attention. So you're saying a company can basically buy things without paying for them up front. What are these suppliers thinking?
Well, they're not crazy. More like strategically invested in OpenAI's success. There are 2 main tricks they pulled. The first, with NVIDIA, is something Goldman Sachs dubbed circular revenue. And the second, with AMD, is a compute for equity swap. Let's start with that NVIDIA deal.
Yes, please. I heard NVIDIA is investing a massive amount in OpenAI, and it just sounded unbelievable. What's the real story there?
It is real, but it's not a free lunch for OpenAI. The plan is for NVIDIA to invest up to $100 billion in OpenAI. In return, OpenAI will use that exact money to buy NVIDIA's GPUs. So the cash basically just circles right back to NVIDIA.
Ah, I see. So it's like NVIDIA is funding its own sales. Money goes from NVIDIA's left pocket, the investment arm, into OpenAI, and then immediately back into NVIDIA's right pocket, which is product revenue. OpenAI gets the GPUs it needs to keep building, and NVIDIA secures a massive customer for the next decade. But from a purely financial perspective, that revenue is a bit self-fulfilling.
It is. Goldman analysts pointed out that investors will likely scrutinize that kind of revenue more carefully since it's essentially vendor-financed. In other words, NVIDIA's stock shouldn't get an overly generous valuation for sales that were, well, enabled by NVIDIA's own money.
That makes sense. It's like Ford giving someone a massive loan specifically to buy a Ford, but on an astronomical scale. So from NVIDIA's point of view, what's the big strategic play? Are they just betting that this will all pay off once OpenAI creates something world-changing?
That seems to be the core of it. By helping OpenAI now, they lock in a top customer and accelerate the AI revolution, which ultimately means more demand for NVIDIA's chips across the entire industry. Their CEO, Jensen Huang, has even lamented not investing more times in AI startups like OpenAI, so they see it as a strategic investment to secure their dominance. If OpenAI succeeds, NVIDIA profits massively. If OpenAI stumbles, well, that's the gamble.
It's a huge gamble. Okay, so if the NVIDIA deal is a clever loop, the deal with AMD sounds even more wild. I've heard it called a historic first for the semiconductor industry.
The AMD deal is arguably even more fascinating. OpenAI agreed to potentially buy up to 6 gigawatts of AMD GPUs worth around $90 billion over several years. In return, AMD gave OpenAI warrants to buy up to 160 million AMD shares at a ridiculously low price, just 1 cent per share.
Wait, 1 cent? Okay, there has to be a catch. I'm guessing there are milestones involved, like OpenAI actually has to buy the GPUs, and maybe something tied to AMD's stock price?
Bingo! It's a 2-part condition. First, OpenAI has to actually follow through and buy and deploy the GPUs. Second, AMD's stock has to hit specific price thresholds. For the last batch of warrants to be exercisable, the stock has to hit $600 a share.
$600? Let's see, AMD is trading around $215 right now. So $600 would mean their market cap would have to nearly triple, making AMD a trillion-dollar company itself. That is a massive if.
A very massive if. But let's do the math on that hypothetical. If both milestones are hit and AMD's stock skyrockets to $600, those 160 million shares would be worth, what, about $96 billion?
Holy moly. So roughly $96 billion in stock value, which just so happens to be almost exactly the $90 billion cost of the GPUs. Essentially, OpenAI could get reimbursed for the entire purchase by selling AMD's stock gains. They could effectively get free GPUs.
You nailed it. It's a performance-based kickback in the form of equity. This arrangement creates this incredible symbiosis. If OpenAI's massive GPU orders help turn AMD into an AI powerhouse and its stock price soars, OpenAI reaps the reward and gets the cash to pay for the hardware. It's a self-funding loop.
That's brilliant and kind of terrifying. It's like saying, I'll pay you with future money if you give me hardware now. And that future money comes from the stock market's excitement about the deal itself. In a way, the people who are actually footing the bill would be the retail and institutional investors who bid up AMD's shares. They are, in effect, subsidizing OpenAI's compute power.
It's a funny way to put it, but it's true. When news of this deal broke, AMD's stock jumped around 24% almost immediately, adding tens of billions to its market cap. So the market itself is rewarding this partnership. For AMD, they get a flagship customer that validates their hardware for the most demanding AI workloads in the world. It's a huge win for them.
Creative financing on steroids. So, with NVIDIA giving them money that loops back, and AMD giving them future shares that could cover the cost, it really does feel like a high-stakes gamble. The entire arrangement hinges on the belief that AI usage will just keep growing exponentially and that OpenAI will eventually, somehow, make a profit.
You bet. And this is where that word bubble starts to creep back in. Because as brilliant as this financial engineering is, it introduces some massive risks. We really need to talk about those. I think they fall into three main categories: credit risk, cost discipline, and ecosystem risk.
All right, let's break those down. Where does the credit risk lie?
Well, look at a company like Oracle, which is also heavily involved. They've committed around $30 billion in cloud infrastructure for OpenAI. Moody's, the credit rating agency, actually issued a warning, saying Oracle's future is getting overly tied to OpenAI, a company with no proven profitability. If user growth for AI slows down, or people stop paying for these services, the whole chain of high expectations could break. OpenAI can't fulfill its contracts, Oracle's new data centers sit idle, NVIDIA's circular revenue dries up. The trust could evaporate very quickly.
Right. It's a domino effect. Everyone is betting on the boom to continue indefinitely. What about cost discipline?
That's about OpenAI's own spending habits. There's a quote from a seasoned Silicon Valley investor saying OpenAI has no inherent cost discipline. And Sam Altman himself has said that making a profit is not in the top 10 things I care about right now. Their mentality is growth first, spend whatever it takes.
That's a classic startup mentality, but at an unprecedented scale. They're basically driving a supercar at top speed, assuming the road ahead is clear and the gas will keep flowing. If market conditions change, like interest rates go up and capital gets expensive, they could be in huge trouble.
Exactly. And that brings us to the third one, ecosystem risk. Historically, companies like NVIDIA sold chips mostly to big, stable cloud providers. But now, a huge chunk of their future revenue is projected to come from AI startups and even government-funded AI projects. Goldman Sachs estimates these groups will account for over $100 billion of NVIDIA's revenue by 2027. These new customers are inherently more volatile. Their funding depends on investor sentiment or political wins.
I see. So the whole supply chain becomes more fragile. If the AI startup bubble bursts, it doesn't just hurt the startups. It could slam NVIDIA's sales, AMD's momentum, and cloud providers like Oracle. The risk is spread around, but it's also magnified throughout the entire system.
That's the perfect way to put it. We have this entire AI ecosystem built on optimistic assumptions and these incredibly creative but untested vendor financing deals. We could be laying the groundwork for the next tech revolution, or we could be inflating a bubble that's destined to pop.
It's honestly both thrilling and scary. On one hand, these bold moves mean faster progress in AI. But on the other, you can't help but wonder if this is the dot-com bubble too, just with AI instead of websites.
So, to wrap our heads around this, what we've seen is that OpenAI's trillion-dollar compute hoard isn't built on cash, but on these innovative and risky financial structures like NVIDIA's circular revenue and AMD's compute for equity swap. It's a fundamental shift.
Right. And these deals have created this deep symbiotic relationship where everyone's success is tied together. OpenAI, its suppliers, and even public market investors are all tangled in this web. It spreads the risk, but it also means if one part fails, it could bring down the whole system.
Which all comes back to the central bet that AI demand will grow exponentially and OpenAI will eventually become profitable. The entire system is built on that optimism, which carries enormous credit risk, questions about their cost discipline, and the potential for a massive AI bubble.
It really is an all-in bet. They've pushed all their chips to the center of the table.
OpenAI's unprecedented trillion-dollar deals are a testament to both the audacity of financial engineering and our collective faith in the boundless potential of artificial intelligence. It forces us to ask a profound question. Are we witnessing the dawn of a new industrial revolution built on a strategic backbone of compute, or are we inflating a grand, interconnected bubble whose eventual pop could send shockwaves across the global tech landscape? The answer won't just decide OpenAI's fate. It will redefine our understanding of value, risk, and the very path of technological progress in the 21st century. All right, that's it for today's episode. Thanks for tuning in, everyone, and thank you, Kevin, for the great discussion. Before we wrap up, let me remind everyone today's discussion reflects personal views only, not investment advice. Please consult professionals before making financial decisions.
That's right. Thanks for tuning in to the AI Explorer podcast. If you enjoyed this deep dive, don't forget to subscribe to our YouTube channel. That's all for today. See you next time.